Traders, welcome back to another price action trading lesson. We're going to dive deeper into understanding price action, and we're going to cover price action rules and how to use these rules to identify high probability setups in the market. The very first thing I do as a trader is I identify the overall market structure, and the structure is clearly bullish. I can see the beginning of the session started with series of high highs and high lows. EMA is rejecting every single time, and this right here is a bullish trend from the open, which means the bias that is being established in the market right now is clearly bullish. I'm always looking for some key entry point, for some channel. You can see we have a nicely fitting channel right here. We're closing outside of the channel, so I follow the trend line rule, which says I'm only focusing right now, combining the bullish bias, the trend line rule, getting the new extreme after break of this channel. And you can see this was trend from the open. There was no bearish downtrend prior that would make this a large trading range or nothing like this. This is straight bullish bias, trend from the open, a good one. So my sole thinking is wait this correction out and buy so I can get a new extreme. So as you can see, I cannot buy just yet because I have a short-term downtrend in play. The trend line rule also applies to the correction, so I'm going to be waiting. We have a new high. This is the latest highest high. We have first entry long, pull back, and we have a second entry long. Can we go long? We cannot, because we have 1, 2, 3, 4, 5, 6 bars stacked right next to each other. EMA is exactly in the middle of these bars, and this right here is a congestion, no trade zone, plus the downtrend didn't fully play out. Signal bar is a horrible doji, so I cannot take second entry long. Even though this is second entry long, you only want to take a second entry long if everything aligns. So bad signal bar and a congestion. I'm waiting. Okay, you can see more congestion. Downtrend created a break, new extreme, so the correction played out, and I can now expect that the market will create new high. So what's going through my mind? Well, I already see congestion. So there are two ways how we trade a congestion. We either are going to fade the breakout if it breaks below and buy, or we're going to wait for breakout to the upside to fail and buy, breakout, pullback. These are two options that I can trade the congestion. Price action has a breakout. Most breakouts fail, pullback, and now we have high-low, breakout, pullback. This is a congestion, breakout, pullback into this area, tested it. And this right here is a high-low breakout pullback, and you can also call it triple test. And this is the first high probability setup for the day, because as you can see, the uptrend still needs new high. The support is holding, which is amazing. The small support is holding. Downtrend played out, and we're only thinking about buying. You have to use double bar entry, but because the bar closed where the last was high, the previous bar, you don't have to chase it. Your stop loss goes one tick below this bar. You wait for trigger bar, this bull bar, and then drop your limit order. High-low breakout pullback. Market created slight new high, but we still need to get new high for the main channel. And now we have even a failed second entry short. This is the lowest level of the correction. First entry short, pullback, second entry short, failure. And once again, we touch the support. You can see important price level that buyers deem worthy. And this right here is a failed second entry short combined with a multiple test, because the support keeps holding. So this is a multiple test, and it's above EMA. Tier 1 signal bar, only 2 points, and it's above EMA. So this is not a congestion. This is a congestion. This is price action breaking above the EMA, and market is working out. And we even had, if I'm going to reset the count, first entry long, pullback, second entry long. Now this second entry long is tad bit aggressive because we're stacking a little bit. You can see the bars are starting to overlap, but it is still decent setup because EMA keeps holding. We had an uptrend from the open, and you're following the trend line rule, so you know what the market may do. So we have set of high probability setups, and price action keeps working high. So this was absolutely phenomenal start of this session. You can actually be 3-0 and be done for the day. Now we created a break new extreme, but you can see EMA keeps holding, and this structure is quite strong. So we have another tool like at pullback, but because this trend is looking quite strong, we can already anticipate possible wider channel. If I'm going to draw a channel like this, what I don't like about this channel, a lot of empty room here, could be late second entry. If I'm going to draw a channel like this, it fits much better. Geometric formation here, bounce here, so I'm going to copy it, put it at the top. You don't have to play the channel just yet. You're focusing on what the price action going to do here. Now we have a downtrend working low break, attempt to create new low. We have a second entry long, new high, first entry long, second entry long. Once again, using the price action counting technique to count for high probability setups. Can we go long? We cannot. Doji, pure doji. So I cannot buy second entry long, way too aggressive. Plus, There's a first break and a new high for our initial channel, so we gotta be a little bit more careful. Can we get high low? We cannot, and market broke lower. And remember, we talked about there are two ways how to trade congestion: the breakout pullback, or you're gonna fade the breakout. In price action right now, we broke lower. Most breakouts will fail, and you're not only buying the failed breakout, you're buying it at the important key entry point. Downtrend played out with the break and the new extreme, and you can see we have first leg down, kind of like a big second leg down, large visual to like a pullback at the key entry point, failed breakout, perfect high probability setup. If you're unsure, you want to see high or low above EMA, but there is no break below these bars, so no high or low. And price action created a new high for a central long, second entry long. Now, when I was watching this live, I didn't like it because it felt like the market's going to roll over. There is so much empty room, but that was a mistake because you can see the support is still coming into play. You're at two key entry points, the trend line and the EMA, and it's also new low, first entry short pullback, second entry short failure, a new high, first entry long, second entry long. Two high probability setups. The trend is quite strong, downtrend played out, so decent setup to consider. I was a little bit afraid that the pullback was so tiny, so much empty room, but when I look back, there are so many key entry points, only 1.5 points worth of a risk, so decent setup to take a chance. And market created new extreme. The break is tiny, so you may be considering possible widening the channel, but you can see market keeps breaking lower, so there was no two-leg pullback. For me to go long now, I would like to see push above EMA to confirm the bullish momentum and a failed second entry short. And because market completely started trending lower, this is where I adjusted and there was a micro break, new high. So at this point, you're not going to argue with the market. The uptrend played out and you have to just focus on this bearish structure. So can we go short? Not really, because we are far away from the EMA. We cannot sell just yet. Okay, we have a second entry short and some resistance, but what is the downtrend? There is no key entry point, no good downtrend in play. You know, it is tempting, but I feel it is way too aggressive because, you know, all downtrends played out when you're watching this live. So even though it worked, feels a bit too aggressive. Now, when I can see price action continuing to work lower, even like this is where I was looking for possible wider spike in the channel because it aligns with the EMA. Market just keeps creating series of lower highs and low lows. So you can see I'm going to zoom back. As a price action trader, you always try to establish the bias, then look for the key entry point and use the price action counting technique to count good setups at the key entry points. Okay, you're not counting setups that are in the middle of no man's land that are not the key entry points. The second entry means nothing. The second entry is important only when it forms under right conditions at the right key entry point. And you have a couple more high probability setups, confirmation setups, etc. So right now we can see the structure is fairly bearish. We have a second entry short. What do you think? Can we take? We cannot. You can see I always keep redrawing these short-term channels. The uptrend is in play. Looks like a first leg up. So this is a second entry short, but it means nothing because the uptrend is in play. Okay, I gotta be patient. We finally created a break and a new extreme. We're above EMA, so only way for me to sell is push below EMA in a lower high. And we're pushing way too far down. A lower high would be good somewhere around here, so you have room to scalp out. You definitely cannot sell below bull bar. And now the single bar is not that great. I don't really like this lower high because, you know, you don't have that much room before you're going to reach these lows. It's starting to go way too sideways. The double bar entry is not that small, plus not that nice. You know, I don't really like taking any setup here. And now we have a second entry short, but it's starting to be way too flat, way too stacked. You know, don't really like the setup right here because you can see how the downtrend is starting to lose steam, starting to be very sideways. You know, not worth it. And market created small break and a new extreme. So I'm pausing, looking to sell. At the same time, I cannot go long because you can see we traded down into it. For the most part, we stayed below EMA. So I'm not thinking about buying. However, I have to pause looking to sell. So just because you cannot go long, that doesn't mean you're going to sell. And vice versa. Just because you're pausing your shorts at the new low, that doesn't mean that you're going to start buying frantically. Price action needs to align, and because you traded down so strongly, you cannot be buying. I was actually expecting some stronger reversal now a little bit. This is why I'm going to draw the slightly wider uptrend. But market completely reversed down. Can we get new high? We cannot. Okay, now I can consider a failed second entry long because we're clearly going back into this trend range, but the bottom is completely falling and market is just continuing to work lower like this. Now I need to zoom back and think about the structure. And you can see quite a long time without the setup, but it's okay. That's what you have to do. Everything needs to align in price action for you to achieve consistency. It's important skill to remain objective, monitor your susceptibility to be, giving in to your mental demons. You cannot make mental errors because you need to wait for everything to align. There is no good setup here, just long waiting area. And because market keeps working so lower, I kind of like looking for bigger downtrend. But this downtrend is not my favorite one because you like to see series of lower highs and lower lows. Something like this, push phase, correction phase, push phase, correction phase. And this right here is just one leg working lower, a little pullback here, and the second leg working lower. So not the best fitting channel, but we are working lower. So I'm kind of looking for some additional channel. Once again, we're so far from the EMA, I cannot sell. At the same time, I cannot go long, so just waiting. Once again, second entry short, far away from the EMA, I cannot take, even though it worked. It doesn't matter that it worked because we need to follow the rules. So even though the setup works, that doesn't mean I can take it. You can see we're bouncing at the low of the day, important key level. We have a failed second entry short, and even if I'm not playing the wider channel, I don't think I can reverse such a massive push down like this, because a lot of times there can be a little fake out. It's going to continue working lower. It's extremely hard to time it, so I believe it's important just to be patient. And I'm thinking we may pull back to this key level, and I'm going to observe what this trend line is going to do. But EMA keeps holding. Let's see, market keeps working higher, and this really made me to doubt this wider channel because it looks like the bigger trend range is kicking in. We have a spike in a channel. Okay. You can see once again, no setup here, just first entries, everything far from the EMA. Too much congestion. There is no good setup here. I cannot take any setup. Okay. Still part of congestion. No tick below. I don't think we can take a setup here. Market created new extreme even for this spike and a channel. So I'm going to zoom back. See my break and a new extreme. So long time without a solid setup, just spike down far from the EMA, little pullback, and a second spike down far from the EMA. So now we are just in the middle of nowhere. Let's see what's going to happen. I'm going to redraw the short-term downtrend. Okay, we have a break, new extreme for this downtrend. And now we have high-low. What do you think? Can you take high-low? Even when you're not playing the wider downtrend and you just focus on the most recent structure, you cannot take this high-low. It's not confirming anything. There is no bullish bias. Uptrend played out. Yes, the downtrend played out as well, but that's not a signal for me to buy. Just because I have high-low, that doesn't mean I can go long. Okay, it doesn't confirm anything. I can treat it as a second entry long, but there is no key entry point. The trend range is not established just yet. It's not confirming anything. There is no bullish channel to confirm it. This is just a setup, local setup, without any bullish confirmation. So I cannot take high-low just yet. Okay, now I can see that the structure is entering a trend range. How can I know? We have a flat EMA in the middle of these bars, consistent price swings up and down, up, down, up, down, up, down, up. So this means you have to redraw a trend range because you're entering right now a different structure and you want to know which rules to apply. Now the uptrend played out with the break new extremes, so you're definitely not excited to go long, and you have the resistance, so you cannot go long directly into these highs. Okay, and they will make it tempting. You can see there's a nice signal bar here, nice signal bar here, but this is why we use price action rules. You cannot go long into these highs. EMA is clearly flat. This is clearly small trend range. Uptrend played out. I cannot go long just yet. There's a tempting second entry short. Feels a little bit too stacked. Not a bad setup, a little bit more advanced trader can consider. Lower high didn't get a trigger, and now we have a failed second entry long. New high, first entry long, pull back, second entry long. And because the resistance is indicating selling pressure, according to range rules, you want to buy low, sell high. You have a new high, first entry long, second entry long. Uptrend played out with the break, new extreme, and large two-legged pullback. So because a lot of bulls are going to get trapped buying directly into these highs, after new high and after two-legged pullback, this is a great high probability setup, great felt second entry long. Selling according to range rules at the top of the trading range. Plus, if you're trusting the wider downtrend, it gives you bearish bias. And market continues working lower, and look at this move. So now I'm observing this move down. I cannot just keep this without a channel, so I'm also going to redraw short-term channel, and I'm going to zoom back to remind myself what is the big picture. So clearly we traded down, so big downtrend needs to get new extreme, and even this shortened downtrend needs to get new extreme. So I have two reasons to expect prices continue working bearish, once again using the price action rule. So I want to see two-legged pullback at the EMA. Can I take second entry short? I cannot, because I would be forgetting something. I would be forgetting drawing the short-term uptrend. I always need to redraw the short-term uptrend. This clearly looks like a one steep leg. It's not full at the EMA, so you can't take it anyway, but respect these short-term corrections. Visual looks like a one leg up. Short-term uptrend is in play. So I want to see break new high and then possible double trap or lower high. Okay, we have a break in new extreme, and this is very tempting double trap. Actually, this would have been a great setup, giving it a trigger, and there is no trigger. Had there been a trigger, I mean break below this bar low, you could have considered, but since there is no break, we cannot really take it. So I need to be patient now, because double trap is not forming as I would like. That doesn't mean I'm going to go long though. Remember, we have two trends down that need to get new extreme. Uptrend played out with the break in new extreme. So I'm just waiting for price action to push below EMA. Okay, this is a good sign that the bears are in the market, and we're truly going to get new low for both channels. And now we have a lower high confirmation setup. Confirmation setup of visual two-legged pullback. EMA keeps rejecting every single time. It broke below, came back, tested it. There is a lot of room to scalp out before the latest swing low, and this is great lower high confirmation setup. The single bar is how big? I think not that big, only 225, so the single bar is not that big. You're gonna wait for trigger below this bar, drop your limit order, and your stop loss goes always one tick above the single bar when you're selling. And according to price action rules, market continued working lower and created new extreme, and now the market is about to close. As a trader, you would have to show extreme patience in the middle of the day, because there is extremely long area, as you can see, 4 hours without any setup, because there's just truly nothing good following the rules at the key entry point. So you have to take setups at the very beginning of the session. There's a lot of setups to take advantage of. Then market dropped, and you just have to sit here, watch market plummet lower with this sketchy channel, no good setups. Market finally corrected, and once the range rules are kicking in, finally you can be selling at this key level. And this was pretty much the last good setup for the day. Break new extreme, and the market is reversing back up. So that's what trading is sometimes about. You can be done very early, and sometimes you need to sit here for 4 hours before you get another opportunity to enter. But I hope you had a good trading day. I'm going to wrap it up, and I'm going to talk to you next time. Good luck with your trading.